Okay, so breaking news. We are living through an historic market sell-off, and it's creating a huge opportunity. Yeah, and today I bought some options. I'm going to tell you what I bought and why. So let's talk about it. This is the Hey Ed YouTube channel. I am your host, moderator, and all-around nice guy, Edward Anderson. I'm not a financial advisor, so do not construe anything that I mention in any of my videos as financial advice. Always do your own research before doing anything with your money. Particularly today, I got to make that point because I'm going to tell you exactly what I did today. Now, it's just what I did. I'm not telling you to do it. I'm just sharing with you what I did. But first, let's talk about what the market did today. For the record, today is April 4th, 2025. Okay, so the Dow Jones Industrial Average was down 2,200 points today. That's 5.5% in one day, a massive move to the downside. And this is after yesterday's 1,600 point downside. So we've had back-to-back gap down days with this large stick to the downside today. And I predicted this in the video I did yesterday, because yesterday the market closed at the low of the day, and today is Friday, and a lot of traders do not want to take the risk of holding stocks over the weekend. Now, because I have a trader mindset, I love this. This is the opportunity that I've been talking about for quite a while on my channel here. And when these opportunities come along, you have to take advantage of them. And everybody out there, even if you're just an investor, even if you don't have time to trade actively, you want to adopt a trader's mindset. You don't have to be a victim in all of this carnage. You can prosper from it. It's important for me to remind you guys that the stock market is made up of human beings, okay? And human beings are emotional creatures. That's why the market's never going to be a rational place. It's always going to be an emotional place. So you have to learn how to take advantage of human emotion. Now, of course, the buzzword out there over the past several trading days is tariffs, right? That is what has propelled the market to the downside. At least that's the excuse they're using. Now, a fun little fact that today the volume in the market is the largest in history. That's a pretty staggering statistic. So today I bought some naked call options. First, I'm going to show you why I'm buying naked call options, and then I'm going to tell you which options I bought. Okay, so this is the 1 month chart. But first, I want to point out to you that having back-to-back days of gap down days with the markets closing at the low of the day is rare. It is rare. This does not happen very often. This is a rare event in the market. That's why the opportunity is so great in here. But now let's scale out here. Right now, we're looking at the 1 month chart. Let's look at the 1 year chart. Now, those of you who are veterans to my channel, you know the big deal that I made about that 42,000 level in the market. Well, that was taken out this week like a hot knife through butter, my friends. And after we took out 42,000, it took out the next support level here at just under 41,000. And then it blew through all of these other minor support levels. And today it's sitting at this support level right here. We are essentially right back to where we were in the market this time last year. At this point, we're only a couple of hundred points ahead. So let's pretend this is the stock. And let's say you bought it a year ago, okay? Right now, you've made basically zero money on that stock after sitting on it for a year and after seeing it run up dramatically during the course of the year. So you gave back all of those profits. So in the past 2 months, the market has given up a year's worth of gains. Let me repeat that. In the past 2 months, the market has given up an entire year's worth of gains. And the lion's share of that sell-off happened this week. Now, as far as I'm concerned, again, this market is broken. The bull market is over. For the foreseeable future here, we are going to be in a trader's market. This is not going to be an investor's market. We're going to see continued nasty sell-offs accompanied with several dramatic rallies along the way. I promise you, we're going to see some very impressive rallies along the way here. This is going to be a wild market in here. And if you're a trader, you should be licking your chops. So let's talk about support levels and resistance levels. Now remember, support levels are levels at which the market tends to stop going down, and resistance levels is a level at which stocks stop going up. Now I use the term stocks, but really this applies to any asset class that you happen to be trading. But for convenience sake, I'm just going to use the phrase stocks. So right now, at the moment, we're sitting on a very important support level. So given my experience as a trader, I'm highly confident that very soon here, and it could be as soon as Monday, the market is going to have a nice pushback rally. At the very least, it's going to be a pushback. It might go on for a few days. It'll be very impressive. It can be very violent. Part of that is going to be profit taking, and part of that is going to be short covering, and you're going to see a nice rally somewhere over the next 1 to 3 trading days. Now, of course, there's no guarantees, but listen, it's extremely rare for the market to have 2 days in a row where it gaps down and ends down dramatically. And having 3 days in a row like that is basically unheard of. So given that scenario, given the fact that I anticipate a pushback rally here in the market here over the next few days, I decided to take advantage of today's very nasty sell-off to go long some call options. Now, this video is not going to be a long tutorial, on options, okay? I want to respect your time, and that's a whole nother topic. So I'm going to talk in very general terms. And there are many different types of, option strategies. Buying naked calls and naked puts is probably the most aggressive, high risk, high return option. That's the one I went for. I bought some naked calls. But what I decided to do is, rather than buying options on the markets or buying, put call spreads, I'm going to buy some naked calls on a stock. I decided, well, I'll go for a stock because if I'm more specific, that gives me a greater possibility of a return by focusing on one particular stock. And I settled on Nvidia. I decided to go for Nvidia because I wanted to find a recent darling on Wall Street. And Nvidia has been probably the hottest stock in the stock market for a few years now. So my thinking is that when the market does put in a bottom and has a rally, there's going to be a lot of bargain hunting in that stock. And this is what the 1-month chart in Nvidia looks like. So today it was down 7%, over 7.5 points. But if we scale out the 1-year chart, look at the damage that has been done to this stock. But also, I want you to note the rallies that this stock has had over the past few months. After sell-off, it has very nice, impressive rallies. And it's below this support level down here. So I think the potential of a rubber band effect over the next few days is pretty high. Let's look at what it did today. This is the action on Nvidia intraday. So what I did is, when the market gapped down, 1,100 points this morning, I started looking at options. I looked at several. I did some Apple too, by the way, but let's just talk about Nvidia here. But right around 11 o'clock in the morning here, when it was trading at 95, I bought the April 95 call options. And I threw out a buy limit order lower than where the options were at the moment. So in order for that trade to go off, I would have needed Nvidia to go down even more, which I wasn't quite sure of, at the time. But then we got that nice little swoosh, and my order went off. So I'm now the proud owner of some April 95 calls on Nvidia. The biggest challenge with naked options is time value, right? Because if you bought a call option on a stock like I just did, and that stock does not go up at all, it just goes, sideways during the term of the contract, the value of the contract is going to go down because of the time value erosion on the contract. And the closer you get to expiration date, the more pronounced, the time value becomes. So what I like to do, I rarely do options these days. I only do them in extreme scenarios, which that's what this is here. This is an extreme situation going on in the market here, and I'm taking advantage of it. I think this is going to have a very nice rubber band effect, over the next few trading days. But in order to get a good price, on an option, what you need to have happen, you need to have a big event one way or the other and then fade it. So this stock was down dramatically today. So I took advantage of that because the quick and severe downtrend in the price of Nvidia in one day sucked the premiums out of the contracts. And that's how I was able to get it cheap. That's the way I like to buy options. I like to buy them after the value of the premiums have been sucked out of it, pretty dramatically. That gives me the best chance. It takes a lot of risk out of the trade. That's not to say it's risk-free. God knows it's risky. But, this is where experience and logic and having a plan plays an important role. And please, again, let me remind you, I'm not making a recommendation. I'm just sharing with you what I did today. This trade absolutely might not work out. A fun little note here on these tariffs, just for the fun of it. Cambodia announced that they are going to reduce their tariffs to about 5%. Okay, I think they're like 60%. They're going to reduce it to 5%. And Vietnam is saying, yeah, you know what? We'll lower ours to zero. They were at 90%. But they're saying, you know what? Just forget it. You don't charge us, we won't charge you. So, hey, this could become a trend. Now, the European crybabies, I'm sure, are going to put up a stake, but I think they're on the losing end of this deal. They need us a lot more than we need them. But this whole tariffs kerfuffle is creating a wonderful opportunity for those of us who are willing to take advantage of it. The markets have a lot of problems that are much bigger than this tariffs issue, like the housing market and the derivatives market, for example. There are a lot of financial shoes to fall that's going to make the market go down much, much more than where it's already gone down. But at the moment, momentarily here, I'm looking for a nice little pushback rally early next week. In the comment section below, let me know what you think about all this. Please like and subscribe. Ed Anderson, live from Minnesota, signing out.
Copy that.